Hello, everybody. This is Patrick MontesDeOca with the Equity Management Academy live trading room special trade alert for Bitcoin. We have gotten a buy signal on Bitcoin at 31,752. If long, use the close below 31,752 as your protective stop conservatively. This is a report that I published in July 11, 2021. Which I would like to review and see what has transpired since as we apply the variable changing price momentum indicator in trading Bitcoin. We'll take a look at what happened and where we're going from here. Let's take a listen. Or you can add to your position and use this level of 29,938 as your second stop and entry point if multiples are being activated. The initial target is the average price of 33,853. Closing about 33,853 activates the extreme level above mean of 35,667 to the sell-to level of 37,768 for the rest of the week.
Are you looking for an automated artificial intelligence trading system?
Buy the gold market at the market. Buy the silver market at the market. We are producing automated signals that are high probability signals, basically. And I wanted to take a look at the Bitcoin chart as basically we have traded since that report was published on July 11th. Where we are trading right now at 46,590. So the signal that was activated on the 11th was tested, obviously, until about the 23rd of July, when it confirmed once again the buy trigger that it was initiated back around the 9th or the 11th, basically, of July. Now, the variable changing price momentum indicator is a probability model that identifies the areas of accumulation and distribution of supply. When the market is trading in blue, it identifies the highest probability mathematically where you may see accumulation of supply, where you may see buyers come into the market. It's trading at the extreme below the mean, the average or mean being 41,195, which essentially has a 50-50 standard deviation. The levels below by 1 are a 50-90 standard deviation of the relative implied volatility to the mean with a 1-to-1 factor. The by 2 level is a 50-90% relative implied volatility to the mean with a 2-to-1 factor. And that means basically when the price triggers and activates the algorithm by following the systematic methodology that we apply, it gives you a very high probability that the momentum of the market is going to unfold as it did. And basically the price, once accomplished, is simply a reflection of the momentum that has been identified by the algorithm. The levels in red identify the area of distribution of supply, where you can potentially see some supply come into the market at these levels. But if the demand is greater than the supply that's coming into the market, obviously the price will be reflected and follow that and by closing above 47,325, it would become the support for the next fractal in price, which activates the high of 65,520. What I wanted to do on this report is basically to come back to the basics and show you how I apply the variable changing price momentum indicator, which is a perfect Fibonacci structure of 5 pivot points that identify the area of distribution of supply, that identifies the average price. And once you identify the average price, you can extrapolate the extremes level above or below. That's what the supply and demand levels are. And as a trader, I choose to take the highest probability trades, and basically I buy the market when it's at the extreme below the mean, or ideally below B2, and when the price comes back up, it's time to load up the truck, and when the price gets to the red levels above or the sell to level, completing the pattern, you may want to take some profits, reduce your position, and manage it accordingly, depending upon your profile. So you can see here a very simplistic structure that uses the structure of the variable changing price momentum indicator, and I also apply over it basically Bollinger Bands, just to kind of get an idea and confirmation of what the other indicators are telling us. On top of this chart, what I would like to do is to lay over a Fibonacci retracement that, let's say, we made from the low of last year of 905 to the recent high that we saw here of 65,520. This is the Fibonacci retracement from the whole move that was made since September of 2020. And what we see here clearly is that the price, after completing the high of 65,520, reverted down to a perfect Fibonacci retracement that essentially corresponded to a low of 28,800 as of June 22nd. And it was negating pretty much the levels of the VCPMI that was identifying a very strong area of support, an area of accumulation, and it told us don't go short here. You don't go short below B2, even if the market comes down, even below B1. And just expect and wait to see the buyers come in that would take the supply off the market and trigger a buy signal by closing above the B2 level of 35,065. The market closed at 37,745 and activated immediately a buy trigger, and it began to activate the targets above as well. As soon as the signal is activated, buy or sell, it gives you a protective level below or above and targets below or above, where you can manage it as a self-directed individual. And as you can see here, the market rallied to the extreme above the mean. And this is a perfect example for those viewers that do not understand the reversion to the mean principle. It's basically that the market found an extreme oversold condition when it came down to the low of 28,800 and reverted right back up above the average price to the extreme above. And this is what it's called reversion to the mean. and the market went beyond the mean, completing the targets above the mean. And that's what I'm pointing to you right now. So let's see where we are in relation to some other indicators, such as the Fibonacci Fend line from the low that we made recently to the recent high. And what you see here is that the market has taken out all of the trend line resistance, the Fibonacci trend line resistance levels, and it's breaking out. Now, in shifting the retracement, the Fibonacci retracement, I want to take a look and see how or what the market looks like as we measure the market from the low that we made recently to the recent high here at 65,520. Let me just correct this for a minute, and I want to clear this and see what the Fibonacci retracement is going to be from the high that we made recently here to the recent low. Now, what you see here is basically that the market has completed the pattern up to a 50% Fibonacci retracement, and this fits right into the sell to levels that I pointed out, that it almost matches harmonically a 50% Fibonacci retracement. If we use the Fibonacci retracement, then the market can rally up to the 61.8, which is the 51,875, and the 58,204, which is the 78.6% retracement. And basically, it would maintain the integrity of this previous trend that was established since last year. And this is almost like a cup and handle formation, which is a very bullish formation. And what we want to see is how the market basically trades through this level. So be aware that the next targets that we're looking at in Bitcoin are 51,875 to 58,204. If we get through the 78.6% Fibonacci retracement, we can rally up to 161.8 extension, Fibonacci extension, that gives us $89,548 for Bitcoin as the target for this year.
Are you looking for an automated artificial intelligence trading system? Do you want to analyze commodities and financial markets to determine when to buy and sell? Looking for an indicator to predict future trends in the commodities and financial markets? Welcome to EMA2 Trade Live Signals. Our variable changing price momentum indicator, VCPMI, is an automated AI trading system developed and tested over a decade. The VCPMI algorithm is based on age-old vortex mathematics combined with Fibonacci wave theory, trend analysis, pivot points, and several other widely accepted financial analytical methods. The VCPMI can help you take emotions out of your trading and rely on simple mathematics to predict future trends in financial markets. This approach will make your trading more effective, consistent, and profitable. VCPMI algorithm. The VCPMI code points and levels are support and resistance levels and behave exactly like any historical supply and demand level. Therefore, the VCPMI code levels are useful as an index tool for both day trading and for selecting and exercising entries and exits for longer-term traders. Why VCPMI? The VCPMI relies on artificial intelligence to analyze markets and predicts future movements, which seek to determine what a security or commodity is worth at a given point in time. The VCPMI uses technical analysis in the form of mean reversion trading, which seeks to capitalize on extreme changes in the pricing of a particular market based on the assumption that it will revert to its previous state. The VCPMI can be applied to both buying and selling, as it allows a trader to profit on unexpected upswings and save when security or commodity is trading at an abnormal level. Visit EMA2trade.com for more details.